Are you looking for something low risk, something you can put money in for the short term but still get decent returns? Well, the money market fund may well be the answer for you. Now, there are people out there who perhaps have money that they want to use for something else. It might be a deposit on a property or something, or it might be that they have money from a transaction, but they're waiting for it to go through. So before we get into that, make sure you like, subscribe, make sure you click on notification and share this video. Also, quick shout out to PodEdit. That's the company that edit my scripts. They edit my videos, and also they do all the post-production. So check them out. They're on Instagram, they're on TikTok, and if you like what you're seeing, they can help you also. So let's get into it. So first of all, what is a money market fund, or what are money market funds? So a money market fund is a type of fund. So that's where a fund manager, so this company or group of people, come together and then they pool all their money together. So what they then do is to invest that money in very low risk assets. So we're talking things like treasury bonds, we're talking about very low risk stuff. And they tend to be very short. So these are not designed for you to keep your money in there for months and months on end. So maybe up to 6 months maximum. So that risk element there, the fact that it's quite low, makes it attractive to people who are quite cautious, people who don't want to expose their money to the market, because the last thing you want to do is to have a deposit for a property or money you want that's earmarked for something, and then you put it into the market drops, and then now you have to either sell at a loss or wait for the market to recover. So this might be the solution for that. So the next question is, where do you find these and how do you invest in them? So first thing you can do, I'm going to share my screen now. I use Trading 212. This is my trading platform, and the reason I use this is simply because it's the cheapest for me, it's the easiest for me, and everything is laid out like I wanted to. There are so many different platforms out there. You got things like AJ Bell, you got Interactive Investor, Hargreaves Lansdown. There's tons of them. Seriously, do your own research. Try find something that's suitable for yourself, or something that's low cost. Trading 212 is actually commission free as well. So if you can find something commission free or as close to as possible as that, then that would be great. I'm actually on my laptop rather than on my mobile phone, so the layout might be different if you're on a mobile phone, but this is the platform that I created for Roadman Investor, so I'm going to use this as the demo. So what you want to do is to click on search, and on search on the left hand side you would see different categories there. If you just scroll down a bit, you see the bit where it says ETFs, and there you have it, money market ETFs. So what this does is to bundle together different assets. So that's what ETFs are. So you can have ETFs that bundle together, for example, stocks or bonds or different kind of commodities. But in this case, these ETFs bundle together different money market funds. So what you want to do then is to pick the right one for you. Now, to help you decide that, there are a number of things that I do. First of all, I try to go for something that's in my local currency. So in this case, this is pound sterling, because we're based in the UK. If you're based in the US, you might want to use something in dollars, or if you're based in the Eurozone, for example, you might want to use something in euros, or wherever you're from, whichever country you're from, try find something in your local currency. The reason being, you don't then have to worry about the different exchange movement in the currency prices. So if the dollar goes up and the pound goes down, that would have an effect, and if the reverse happened, that will also have an effect. By sticking to your local currency, that removes that altogether. Now, the other thing you might want to do is to use my trusted website, Just ETF. So if you click on that, you can type in money market, okay, and just search that. So money market, there's 16 different options there. So you can see that there's US dollar short maturity one there, overnight return, loads of different ones there. So first thing I try to do here is to sort them by total expense ratio. Now, because they're funds, there's a fund manager, so there's this person or group of people that are responsible for managing the funds for you to make sure that they're performing as they want them to. Sometimes they might take some assets out of them, they might add more in, and so on and so forth. So what you want to do is to make sure that you look at the fees that they charge for their services. So for example, once you sort this by total expense ratio, the cheapest one here is 0.07%, and the highest one here is 0.1%. So that means that in this case, for every £10,000 you have invested, £7 will go towards the fees. Okay, so that's relatively low. In this case, £10 out of every £10,000 invested will go towards the fees. So that's something to bear in mind. The second thing I'd like to look at then would be the performance. Now, bear in mind that past performance has absolutely nothing to do with future performance. So just because he did well last year or because he's doing well today doesn't mean that's going to carry on. But I like to look at this. It just gives me an idea of how well the fund has performed. It's got nothing else to do with it. So you can see that's done 2.71% in last year, and you got this one which is done particularly well at 8.1%, and you got all the different ones there. If you look at the replication column, you got full replication, or you got optimized sampling, or you got something called swap. So swaps are things that are done using advanced accounting, and if you have something like full replication, that means that they're buying the underlying assets. So say for example, the short-term asset that they're putting this money fund into treasury bills, so which is the case here. So this is a 1 to 3 month treasury bill. So in this case, they actually hold the treasury bill. That's why it's a full replication. So once you've had a look in there, say for example, we'll look into this one because it's done so well. Let's have a look. You just click on it, and this then gives you a little bit more information. So this gives you the total expense ratio at 0.1. Replication is synthetic, so they're not actually buying, it's not full replication. They're using advanced accounting for it. You look at the fund size, you look at when it started, and then it gives you a bit more information. So that's the current price, £99.03, and it tells you the movement there. This website is really good. It gives you charts. So you look at 1 day, 1 month, 3 months, 6 months, and so on. You can look at the max. You can then scroll a little bit more. It gives you a bit more information now. So that's the index is tracking the selective euro overnight return. It tells you the investment, so it's a money market, as you can see there. That's the fund size, the expense ratio. That's the amount you're paying in fees for the account manager, the fund manager, sorry. So this is an ETF, and it's long only, which means that you're backing the price to go up, as opposed to short only, which is you're backing to go down. This is the accumulating type. For the volatility is 4.8%, so that's very, very low, and is domiciled in France, and the name of the fund manager is Amundi. If you scroll a little bit further, you can see all the performance charts in there. It tells you the risk, so this will be very low risk. You can see all the different stock exchanges listed in, so it's on the Stuttgart Stock Exchange in Germany, you got the Italian Stock Exchange, you got the Paris one, London, and you can see all the information there. You can do a comparison of different ones if you wanted. That's completely up to you. So next thing you want to do is to see if this is on your investing platform. So if you look at the ticker symbol CSHD, so if you go back to your platform, in this case Trading 212, you can see that that's not there. So that might not be the best one for you because it's not on your trading platform. So you might want to look for something that is on your platform. So if we look at this one, for example, this is BBM3. Okay, so for the sake of the video, let's look into this one. So similar kind of thing. You can look at all the performance. You can look at the charts, the expense ratio for this one. is 0.07, so it's even lower than the previous one. So similar kind of checks, just make sure you're happy with all that. And now that we know that it's on the platform that you're using, you can simply click on buy. Now this is a laptop rather than a mobile phone, so the setup or the layout might be a bit different, but there will be a buy button somewhere. And in this case, you just look for, you'll have 4 options. So you'll have market, limit, stop, or stop limit. So for the sake of the video, I'm going to explain just market or limit to you. Now market means that the system will try to execute the order at a price close as possible to the current screen price. So currently this particular fund is trading at £87.90 per share. So that means that if I was to put an order in now, the system would try to buy as close to that as possible. Now that's not to say you're going to get it at 87.90 exactly. It may be £87.91, it might be 88, it might be 82, sorry, it might be 89. So all the system is going to do is to try to get the best price possible for you. So you just type in the amount you want to invest. So for example, £1. Because it's trading 212, it's a platform that allows you to buy fractional shares. It means you don't have to have £87.90 to invest in this. You can just put as little as £1. You can put £2, wherever you've got. And you just click on review, and then the review gives you a summary. So it gives you the order type, market buy. It tells you the share value, that's £1. The number of shares you're going to get for your £1, approximately 0.011 shares. This commission is free because it's trading 212. Some platforms will definitely charge you. Make sure you find one that's either free or as close to free as possible, and then it gives you the total. So all you do here is to click on send buy order, and job's a good one. Now bearing in mind that we're filming after the market's closed, so this will sit there for the next 10 hours 26 minutes until the market reopens, at which point the system will kick in and start looking to fulfill the order for you. So what you might find, however, is that in the morning that price might have gone up. Say for example you wake up and that's now £95. The system will execute at the closest price to the screen price, so it may well execute at £97. Now if you don't want this and you want to minimize this happening, you could use a market order instead, sorry, a limit order instead. So when you click on limit, you use the slider to decide how much you want to invest. So for example, let's say £1.05. Now you get to tell the system the maximum you want to invest. So say for example, I don't want to spend any more than say £85, let's say. And then you can just click on £85. You can review the order. You get the summary as always, and that tells you limit buy, the number of shares you're buying, the value of the shares. It tells you the limit price, so this is the maximum price that you're setting. That means that if the system wakes up in the morning and the price continues to go up or stays at 87, it won't execute. If the price drops to 85 or below, then it will execute. It tells you the expiration, never. Now if we were doing this when the market was open, you'll have the option for end of day, which means that it will try to fulfill that order for you until the market shuts. Otherwise, if that price doesn't hit, so it doesn't go down to 85 or lower, it just won't execute. Now that could be a good thing, because you might just think to yourself, look, I don't want to pay more than 85 and that's the end of it. So if it goes up, then you haven't overpaid in your eyes. Now if the market goes up and up, with the case of the market order, let's say for example it goes up to £92 and it executes at that price, and then the price continues to go up, say 150, your quid's in. Whereas with this, because you set that limit order, it won't execute that trade, which means that you might have missed out on the increase. You just need to make sure you're happy with this and you're satisfied with this. And it tells you commission is free again, and the total is £1.02 in this case. So all you do is simply send the order, and the same applies. So when market opens, you'll execute. So we've talked about what market orders are. So these are short-term, very low risk investing tools. So rather than exposing yourself to the market, you might want to put it into something like this, which means that you're still getting decent amount of return. So it's good for people who have money available in the short term. Maybe they want to use it for something in the near future. So it's not good for people who want to hold it long term. So for example, your emergency fund that you might hold for maybe 2 years, 3 years, as a backup amount, this might not be suitable for that. The good thing about this as well is that because it trades like a stock, you can buy and sell it quickly if you need to. It also means that you have the peace of mind of knowing that you have access to that money very quickly. We've talked about different platforms that do them. So I've just used the Trading 212 platform, but there are so many others. AJ Bell, Hargreaves Lansdown, eToro, they'll all have their own different versions. And so just something for you to bear in mind is that you can also buy this into an ISA. So that means that if you buy in a stocks and shares ISA, the returns will be completely tax-free. Unlike if you were to use, say, a high yield savings account, whereby once you hit your individual savings amount, the profits are now taxable, or the returns are now taxable. With this one, you can buy inside your stocks and shares ISA, which makes your returns completely tax exempt in the UK. In the US, there are different versions of this kind of wrapper, the Roth IRA, for example, or the 401k. In other parts of the world, Canada, China, wherever you are, there may be different options for you. So if you have these kind of options, make sure you make the most of them. Make sure you take advantage, because you don't want to pay tax unless you absolutely have to. So we've covered a bit there. If you're happy with this, make sure you leave a like. If you're not happy with this, leave a thumbs down. Make sure you share. Let me know what you use with your short-term money. Do you put them in savings accounts? Do you use high yield accounts? Have you used money market accounts before? What is it that you do to minimize risk? Say, for example, you're saving for something and you're going to need money imminently. What's your strategy for that? Do you have someone who's thinking about something like this, or someone who's just a naturally cautious investor? Make sure that they watch this video, share it with them, leave your comments, like, subscribe, check out Pod Edit. And as always, thank you very much for watching the video. Join me next time. It's a Roadman Investor.